Good morning, everybody. Welcome to the Locke in Your Success Trade and Market Update for December 8th, 2014. Before we get going, I would just like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also keep in mind that we are using hypothetical computer simulated results and examples in the presentation, so please be aware of that and be aware that we do try to represent them as accurately as possible. However, actual results may vary. If you're visiting us on YouTube or some other venue, come over to our website, check out our programs, M3 Bearish Butterfly ROCK, M21 Group Coaching, and as well as our Trading Triangle programs. Join our mailing list, get your free reports, 7 secrets to become a successful trader. Sign up for this free weekly webinar. Let's take a look at what's going on in the markets. Last week, we were expecting short-term the Russell to go down, and Monday we actually had the biggest or the largest daily down move since October, and that was immediately followed by the largest up move, weekly up move we've had since October. So fairly good sized down day, and we ended up actually closing for the strongest week we've had in about 5 weeks. So like I said, we were expecting the pullback early. I was expecting a deeper pullback than what we had. Given what the other indices did last week, I still have to be bearish on the Russell as well as the other industries, at least short term. So if you look at the SPX, this pullback was virtually nothing. The Dow pullback was virtually nothing. And even the NASDAQ was a little bigger, but still really nothing. So the indexes in general, the indices are still overextended. They're still grinding up. Would still be expecting some sort of a retracement short term, so that's the way I'm going to call it. The time of year, December is typically an upgrinding month, so that's possible it may not happen, but at some point we're going to get something significant to the downside, so I would just kind of watch yourself and try to cover for that as much as possible. And until then, we'll just keep on trucking. So essentially in the market, that's what I'm thinking. Again, overall longer-term bullish, but thinking that we are still way overdue for some sort of a more normal retracement here. So if we look at our positions here, remember last week I was talking about the December bearish butterfly, that I was just looking for an opportunity to get out of this. And if we just go into BackTrader real quickly, Monday morning, actually right after the meeting, the position was up over our reduced profit target. So let me see the time I actually pulled out of this. I believe it was around, well, it was before 10 o'clock, because 10 o'clock I had my other meeting. So if we come and just take a look at this, this actually, we had a decent down move on the open. So didn't get 8,000 or 7,000 out of this, was more in the 6,500 range. But, after we got off the meeting, pulled out of the trade here at a profit of 65.05, I believe. Let me just take a look at the reports. Yeah, 65.05, which is about 13%. Brings us to our first close trade of December. And for the year, for the bearish butterfly, we actually ended up turning, after the 13.1 in December, about 146.2% on our planned capital, which is more than expected. So even though we didn't really hit profit targets all year, we had a very, very good year, at least not the larger profit target. Very good year for the bearish butterfly. As far as the other trades, we'll have to see how they go. However, I would expect a very good year for our M3 trade, which is here, 87 before coming into this. Doesn't look like the M3 is going to be a big winner this month, but should put us up a little bit higher than this. The ROCK trade is probably going to be a little bit higher than this, or right around this level. And of course, we have the V Condor. When we look at the positions, it's going to give us, I don't know, a few percent this month. It's going to round out, which is a disappointment for the year, right? We're expecting a higher return for that for the year, but it should round us out somewhere in the low 20%. Now, keeping that in mind, I mean, you have to remember that 90% of the investors in the world are looking at maybe a 10 or a 12% return and thinking that's fantastic. As a matter of fact, I have a lot of people who tell me it's impossible to even hit 20% in a strategy similar to this in a year. And we're kicking that with all our strategies. So 20%, nothing to complain at. That's a very simple, easy to manage strategy. Even in a year that wasn't particularly good for it, pulling that kind of a return is pretty nice. So you just gotta have to keep that type of thing in perspective. All right, but we'll see where the year closes out. Let's see. I guess we have 2 more weeks left, so we'll see where the rest of these close out in 2 weeks. Either way, it's going to be a good year, even if we take losses. So really nice there. Let's take a look at. Let's see. We have a December V Condor, which has been in trouble most of the month. Let's just kind of switch over to that. This here, as of Monday morning, was still down about $656. We were sitting in this position here. Really, no need to do anything all week. So there are no adjustments all week in this. If we come to the end of our week here, this being a little slow this morning. Anyway, what ended up happening with this, I was on waiting for the update. I'll just kind of talk. Oh yeah, that's still Monday. Well, let's move on to, thank you guys. That's why I have you on, so that I can do a good presentation, because sometimes I forget about stuff like that. All right, so up $732, no adjustments. Here is what we're looking like. So essentially, I'm pretty much almost ready to take this V out. If the market grinds up again today, or if it I'll probably leave it. If the market really comes down at all, I'm likely just going to pull this out, see if we can't let this thing expire at some sort of a reasonable profit, probably in my guess is $2,000 range. So should be a decent trade for this. Unless you have a really hard move down today, then that might be an issue. But looks like it should be at least a small win for the month. So that's doing fine, or a whole lot better than it was. The M3 trade is, like I said, this was put on when the market was down and continuing to struggle because we've just had this constant, market's just kind of hanging up at the tops. And this trade doesn't like that, as we found out in 2013. And essentially the trade is designed to break even if the market decides to continue to go. So this did have a couple of adjustments this week, and they were on Wednesday. This is the position we were in as of last week, actually, last Monday. So let me just widen this out. We had 10 shorts here at 11.50, 10 at 11.30, long strikes at 11.80 and 10.80. We were pushing our maximum delta for outside the 10 here towards the end of the week. So all we did, towards the end of Wednesday, so all I did is I did 5 11.50, 11.60 verticals for the position to look like this. And we're drawn down slightly towards the end of the day, which is fine. Like I said, essentially a break even. And then Thursday, we didn't have to do anything with the pullback. That wasn't that big of a day down. And then Friday, we did another 5, 11.50, 11.60s. So if we push to Friday, you can see I have all the shorts up at 11.30. I'm sorry, up at 11.60. The position delta was minus 39, and again, we're right about break even, which is essentially what the trade is designed to do. So should the market continue to go up here or not come down, we'll probably pull close to break even, maybe plus or minus a little bit for the month on this particular trade. If the market comes back down and we get into here, we could actually still hit our profit target numbers, although I'd likely pull it at around probably a $3,000 gain and just kind of move on. So that's what I would have for the M3. If you remember, the ROCK trade is in a very, very similar position. So if we come back to Wednesday, I have just a couple questions here, so let me do that. It's asking, do I take the V out by closing the middle longs? Yeah, on a V Condor, yeah, we're just going to close out the straddle, or the strangle. Whatever it happens to be at the time, if we're in a V Condor, we're just going to close that out. With the M3, do I still want to stay in till the end of the week? Yeah, I will hold that till expiration, and you'll see what we do just to kind of hold our profit and loss so that we break even on it. If the market continues to go up, if it comes down, then we'll work it. I mean, essentially, I'd be willing to drop out of that at around a $3,000 profit if that is to happen and the market comes down is profitable. So I'd be willing to just drop out of that this close to expiration. And yeah, and I have no problem if the market continues to grind up. I have no problem bringing it right into expiration. So, in other words, we're going to give it the market all the chance we can, every chance we can to come back into our profit range. Can I show the T-log for the M3? Yes, I can show the T-log for the let's see, the December M3, which is here. And I will expand this for you. So that is, there is the beginning of the trade. We started way back at, 1080 short strikes, right? And that is the second half. All right. And let's see, is there any suggestions for using the M3 or Bearish Butterfly against one long 401k? Yeah, so a lot of times if you size your Bearish Butterfly correctly, you can size it against a 401k type of or a long portfolio. So especially if you're, I don't know what you have in your 401k, but you know, if you have, especially if a small cap account, or if you're doing like something in your 401k that kind of mirrors the index, which is pretty much what you should be doing in your 401ks. It shouldn't be doing individual stocks really. It should be doing some kind of an index mirror, like a a small cap mirror or a S&P 500 mirror, or you can even do international funds too. But those tend to be the safest things to do with a 401k, and you can hedge that off with a a Bearish Butterfly appropriately sized, which is essentially going to act like an M3 trade, where you can just do it with a butterfly in general, butterfly with verticals, and use the with the appropriate size, and then use the long stock that you have as a instead of the calls. So yeah, so you can certainly play with that. I do have clients that do that. I do like the Bearish Butterfly approach a little bit better. But with the Bearish Butterfly approach, one of the things you would change your Bearish Butterfly to deal with, if you get into a Bearish Butterfly and start putting in the Delta Theta rules and stuff, and you get rolled on top of the market, it's going to help the Bearish Butterfly win more often. However, it also puts the Bearish Butterfly trade in general at the risk of a big down move. So now you have a portfolio of long stocks with a risk of a big down move, and you have your Bearish Butterfly with the risk of a big down move. That's usually not a good combination, and can get you in trouble. So you would do it with some modified rules to stay behind the market. But yeah, you can certainly do that. All right, so let's shoot into, so let's go to the ROCK trade, which was very, very similar to the M3 trade, except I had two shorts at 1160 earlier in the week. So, and that was because the long strike was in a different place. So if we come to our adjustment point, I just did 3 of these 1150, 1160 verticals to put us in the same position that the M3 was in, with the exception of the location of the call. And then on Friday we did the same thing. I did 5 more 1150, 1160s. And just due to the timing, this trade's up slightly more than the M3 trade, but still relatively break even. Now, the difference between this trade and, let me just go to Friday here. The difference between this trade and the other trade is that this isn't an M3 trade, it's a ROCK trade. So should the market continue up much higher, in other words, if we start blowing past this 1190 level, this trade is going to be converted into what we call a rock position, and this will, if the market continues to go up, this should make a significant amount of money here, and everything goes fairly well. So this is actually very happy with what's going on here. We'll see, if you remember, this is pretty much what happened last month in November. We were pretty much break even at this point. The market pushed higher. We went into our rock position. We pulled a 20% profit out and moved on. And that's the way the trade is designed to work in this type of a market. So we'll see what happens. We'll see what happens. If we want to look at the T-log on this, this is a lot less because we started 30 days to expiration. We really didn't have any roll-ups because we started at the 1130. So this is that's the rock trade. And that is all we have for December. So we're going to know pretty soon, within a couple of weeks here, or a week from Thursday, how these make out. So we'll go from that. Okay, what will, for the rock trade, what will be my trigger to go into a true rock trade? Essentially, if I outrun my M3 position. So if you go by M3 guidelines, I roll this up at 1190. So instead of rolling up an M3, I'm going to roll up into a 1170, 1210 rock trade, which will eventually scale into, if the market continues up, an 1170, 1210, 1230 rock trade. Essentially, the market can go to 1220 without a problem, and that'll actually work out fairly well. All right, so I have a request for T-log for a November rock trade, if I can find it. 14 November rock trade. This was actually moved around quite a bit, but that is the first 30 records, and I'll scale down here to show, oh, that's going to be our next 30 records. That's the end. How far would I expect the Russell to retrace? Oh, that's an interesting question. It's going to end up, depend on how far the other stuff retraces, but the SPX I'd expect to retrace to about 50 points. So I expect about 50 points on the Russell. So we see what a support level at 50 points down on the Russell here is 1130. Yeah, so Russell might be looking as low as 1110. I would. No, actually, what else you can do too is you can put price targets in here. You can do a measurement of this to this, and put a target in, right, 1120, 1110 area. So I would think if with a market pullback, this would try to go to 1120, 1110. Again, I don't know that I would expect that in December because December is usually such a strong month. But I would say at some point in the next, by the end of January, we're definitely going to see that, and it'll probably be happening relatively quickly once everybody gives up on the rest of the market. But that's what I would expect there. And let's go back to our T-log. We'll close this out. And that's all the December positions. If we look at the January stuff, really, we haven't had enough market movement to do anything in January. We got a January Bearish Butterfly on, which had no adjustments, and is sitting here with a $680 profit. So this was, like I said, just entered, and that's all there was. We have, I'll show the T-log quickly, but there's not a whole lot of excitement going on there. We have our January M3, which, again, has had no adjustments. We're sitting here in Delta guidelines. We're sitting in this position here, just kind of waiting things out. And so that's been uneventful. That's a T-log for that. We have a January V Condor, which again, nothing. So here's what this looks like. And of course, with a slight grind up this is probably going to be the best performing trade right now because this is a favorable environment for this type of a trade. So this is up $974 and looking quite nice there. That should actually be a good trade for this month, assuming the market doesn't fall too much. And there's a T-log for that. So that's essentially all we have. We're waiting for another 12 days, or actually not 12 days anymore if we go live here. We're waiting for another 11 days, or I'm sorry, 9 days to get into our rock trade. And when we're 56 days here, which is what, another, I don't know, it's quite a while here before we get into our February trades. So except for the February V Condor, which is actually going to be entered in 11 days. So that's what we have. All right, so why did I choose an 1140 call for the January M3 instead of 1150 or 1160, etc.? Let's go to the January M3. So here is what we're looking like in the January M3 after hours. Essentially, I'm just looking for a call that's, I'm going to put a call in that is going to help offset my delta from my butterflies. Now, when we entered this here, I mean, usually I'm going to go for around 90 delta, 92, 93, something that's going to have a small amount of time value. Let's see, when was this actually done? This is done on the 21st. So if I come back to the 21st, right at the time, this call was about 93 delta, so about 240 time value. Realistically, I could have gone with I'm trying to balance out how much I'm getting, how much I have to pay for time premium. I mean, usually I like to be in the $1 range, but on the other hand, I don't like to be so deep in the money that I'm just needlessly eating up capital. So I'm just kind of trying to find a balance, and I just kind of look at it and say, oh yeah, I mean 93 delta works pretty good. And at the time, it was putting me 2 positive delta for my 10 butterflies. So if I had 10 butterflies and I went with a 93 delta, I would have had more positive delta than I probably wanted, although that would have turned out to be okay because the market's been pretty bullish. But I would have had a little bit more positive delta than I wanted, so I could have gone deeper in the money. I mean, deeper or less, or closer towards the money. But then I would have been paying, if I wanted to bring this delta down, I probably would have been paying $7.60 or $9 in time premium to bring that down where I wanted to. So I went as far away as I was willing to go deep in the money with a reasonable amount of time premium, and then I jacked up some of the butterflies just to even my delta out. Because I'd rather be in the butterflies than the calls, just because I have more potential to make money. So I mean, that's essentially the reasoning behind it. Reality is you could have done any one of those. This system is very, very flexible. I mean, I could have even gone with the 10 butterflies and been up at the 760 time premium. It's just not going to perform as well. In other words, it's going to be more of a drag on the trade because all this time premium I have to get over, and I'm a smaller butterfly size, so doing this way is a little bit more efficient. But the trade works out either way. All right, so back to the December rock. Would I show what strikes you would be? I think, yeah. So yeah, I think if the market went to 1190, the first thing I'd be looking at is putting myself in the center of the position. I'd go with 1170, 1210. Now, if we happen to have a day that shot up to 1200 or something, I might, or if it, we get a 40-point move in a day or something weird like that, then I might change my strikes. But yeah, I would probably be at the 1170, 1210. All right, so for the M3, do I generally feel it's advantageous to around 56 as opposed to 30? Well, the thing is, you never know when the money's going to come into the trade. So in the program, We do it from 56 to 30, and we do it from 56 to 30 because I like to see you experience all kinds of situations. You know, what's the trade react like far from expiration? What's it react like close to expiration? And how are things different? The reality is we don't know. I mean, sometimes you get into an M3, you're at profit target in the first 15 days before you even hit 30 days to expiration, if you happen to have a good month. Other months like this, you know, you enter 56 days, you had nothing but an up move and it just hung there. You end up being in the trade for all this time, and you either make money right at the end or you just kind of close it out and move on at somewhere near break even, hopefully. Or a lot of times it'll back off and you'll make your profit target in the last 5 days. The reality is we don't know in advance which condition that's going to be. So usually what I do is I like in a lot of my live accounts is I usually won't overlap an M3. So I'm essentially going to get in a new M3 when I get out of the old one. So, or if for some reason I think there's more opportunity in the following month, in other words, if things get too tight for me in December, sometimes I will go and, in other words, I'm taking on too much risk to make money, right? Because you get into this thing where you get this feeling that, hey, I have to roll on top of the market. And in that case, if I'm in an M3 trade, I didn't enter the trade to take on this ton of risk. So, you know, a lot of times I'll hang behind the market until I think that, you know what, this probably isn't going to do anything. I'll just close the trade out, go into the next month. Again, that gives you into cycles where you'll have a certain amount of cycles. You're in 28 days to expiration, then all of a sudden you'll have a good month and it'll pop the profit in right away, and then I pop out to 56 days. So I don't really care what day I get in. I usually don't overlap. If you don't mind overlapping, if you have the money in your account and you want to get the practice in, it's a good practice to go 56 days. A lot of learning there. Did I say 30 days to entry is the latest I'd enter an M3? No, I mean, I'd go in 28, 15 days. They're going to react differently. I have some traders who just do 15-day M3s too. Works fine. So you can do that. You have to lower your profit target most of the time because the market really has to go your way in order to actually make anything, but that does happen quite often, you know. So yeah, so really you can trade any time frame with this system. It's very effective. You're going to be trading it a little bit differently depending on the time frames you do. But if you're new, especially, I like people to go 56 days and experience all the time frames, and then they can decide how they like to trade. All right. So I think that is it's all the questions we have, and so far everything is looking good. And I hope everybody has a great week, and we'll talk to you next week. Thanks. Bye.